All right, let's talk about January 2026, because that's when the crypto market, after this massive, incredible rally, just fell off a cliff. The party came to a sudden, screeching halt. So in this explainer, we're going to break down exactly what happened and why this was so much more than just another market crash.
Just get a load of this number. In a single 24-hour window, the total crypto market cap just plummeted by 2.4%. I mean, that might not sound like a huge number, but we're talking about billions, with a B, in value that just got vaporized. It sent these massive shockwaves through the entire system, and honestly, it caught almost everyone completely flat-footed.
And the headline that everyone saw was even more brutal. Bitcoin, the king, right? It plunged all the way down to a 2-month low of $83,000. And look, this wasn't just some little dip. No, this was a decisive, powerful break below some really crucial support levels. It was basically a giant sign that the bulls had totally lost control of the wheel.
So the big question is, why? What on earth caused this? Was it just one single thing, some black swan event that nobody could see coming? Or was it something way more complicated? Well, as you're about to see, this was a brutal, nasty convergence of forces, a true perfect storm.
And that right there is really the core of what happened. This whole crash wasn't because of one single domino. It was this powerful, almost cinematic combination of massive external pressures that came crashing into some really serious weaknesses that were already brewing inside the crypto market itself.
So let's start with that first major force, a super high-stakes game of political chicken that was playing out in Washington, D.C. Now, this wasn't just some background noise you could ignore. It created this huge, dark cloud of uncertainty that was just hanging over all risk assets, and that absolutely included crypto.
The immediate danger, the thing everyone was watching, was a partial U.S. government shutdown. Federal funding was about to run out, but lawmakers were completely deadlocked. They couldn't agree on this massive $1.2 trillion funding package, and the real sticking point was the part that funds the Department of Homeland Security.
And what really threw gasoline on this political fire was a tragic human element. The whole debate over funding for ICE got incredibly heated after the very high-profile, fatal shootings of Alex Preety and Renee Good up in Minneapolis. I mean, that event just hardened everyone's positions. It made compromise basically impossible, and you saw prediction markets pricing in a more than 75% chance of a shutdown. Things were looking grim.
Now you might be thinking, okay, a government shutdown, why should a crypto trader care? Well, here's why. It's not just political theater. When the Treasury is unfunded, it can actually tighten global dollar liquidity, and that's the lifeblood of the entire market. When the Department of Labor is unfunded, you don't get critical data like inflation reports. That leaves investors, and even the Fed itself, basically flying blind.
Okay, so at the exact same time Washington was stuck in this gridlock, another huge player was making a move, the U.S. Central Bank. The Federal Reserve made a policy decision that basically threw a giant bucket of cold water on investor hopes, and it just added more fuel to this growing fire.
So here's the massive disconnect that happened. The market was desperately, and I mean desperately, hoping for aggressive rate cuts to juice the economy. But the Fed, well, they felt boxed in. They pointed to this stubbornly sticky inflation, and they held rates steady. That's it. So even with a couple of governors dissenting, the message from the Fed was crystal clear. The era of easy money was not coming back anytime soon.
And this whole situation created this incredible test for investors. You've got political chaos on one hand, you've got the Fed tightening the screws on the other. So the question became, where do you go? Where do you run for safety? Was this finally going to be Bitcoin's big moment to shine as digital gold?
The answer was a resounding nope. Not even close. Investors ran straight to the oldest, most traditional safe havens in the book. Gold surged over 2%, actually hitting a record high of $5,600 an ounce. Silver jumped even higher. This was a classic textbook flight to quality.
And what were digital assets doing? Well, they behaved in the exact opposite way. Bitcoin and Ethereum just sold off, hard. They traded exactly like high-risk speculative tech stocks. And this is such a crucial takeaway. When things got really scary, when a real macro crisis hit, the market treated crypto not as a safe haven, but as just another risk asset that you sell.
Which brings us to our third major force in this perfect storm. Because look, the external pressures were immense, for sure, but what they did was expose and just pour salt into a series of cracks that were already forming inside the crypto market itself. The house wasn't exactly in order. And the first, and maybe the biggest of those cracks, came from the so-called smart money.
Remember all those institutional players who poured into the Bitcoin ETFs back in 2025? Well, they were now stampeding for the exits. We saw 5 straight days of massive outflows. We're talking over $1 billion pulled out, and that just created this relentless, overwhelming selling pressure.
And all that selling pressure, it triggered a devastating cascade effect. Over $1 billion in leveraged crypto positions were just liquidated. Poof, wiped out completely. And get this, a staggering 88.7% of those were bullish long bets, people betting the price would go up. It just confirms that the market was caught completely and totally by surprise.
On top of all those liquidations, you had a whole series of other internal events that just completely tanked confidence at the worst possible time. We saw signs of market manipulation by these huge whales, some major security failures, and this lingering, nagging uncertainty about what was coming next with regulation.
I mean, the problems just kept compounding. You had some unknown whale putting up these massive sell walls, just capping any potential rally before it could even start. The Matcha Dex aggregator got hacked for almost $17 million. And then, maybe the most damaging of all, these allegations surfaced that crypto seized by the US government itself had been stolen. Every single headline was just another reason to sell first and ask questions later.
So, when you put all of these pieces together, you've got the political gridlock, the hawkish Fed, crypto zone internal fragility. What does it all tell us? Well, it points to a really fundamental shift, a brand new reality for the entire digital asset market.
One analysis of the whole thing summarized it perfectly. They called the drawdown the culmination of a perfect storm. And the key insight here is that this wasn't just a crypto failure. This was the moment where crypto got caught up in a much larger global financial story. So let's just recap those 4 forces that came together. You had fiscal fragility from that shutdown threat. You had monetary inertia from the Fed holding steady. You had geopolitical de-risking, which pushed investors into safe havens like gold. And you had institutional rebalancing, as all that big money fled the ETFs. Together, those 4 things created the crash.
And this right here, is probably the single most important takeaway from this whole event. Crypto is not operating in its own little isolated bubble anymore. Those easy money days are over. It is now deeply, fundamentally intertwined with the traditional global financial system, for better, for worse. And that means it's subject to all the same macro forces as everything else.
Which leaves us with one last and kind of provocative question. This crash proved, without a doubt, that crypto is now part of the system. But in becoming just another asset class, something that gets moved around by interest rates and politics, has it lost the very thing that was supposed to make it so revolutionary in the first place? That's a question the entire space is going to be grappling with for a very long time to come.